Good morning. It's Jeffrey Christian of CPM Group. It's 11 o'clock on Tuesday, the 28th of February here in New York. I'm going to do a short video today. CPM Group has its silver webinar, free silver webinar at 10 o'clock on Wednesday, and we're going to be focusing on that a little bit more. But I did want to talk about the precious metals markets and do some video today. Gold and silver have been lower. They showed further weakness Monday and then even more on today, Tuesday. There are several factors going on, but basically what you're seeing is that the financial markets are looking at and coming to consider a stronger view of the economy and stronger views of end demand, both in terms of business investment and also and business spending and consumer spending. As a result of the view that maybe we're not about to tip into a recession, interest rate expectations are rising. So if you look at the CME Fed Watch, these guys were expecting interest rates to peak with the January-February FOMC meeting and or maybe the late March meeting. Now the consensus is that the Fed will raise interest rates at the end of March and again at its May meeting and again at its June meeting. So the financial markets expectations are that interest rates will rise another 75 basis points between now and June, whereas just a month or so ago, the consensus bet on the CME Fed Watch was that interest rates would rise another 25 or maybe 50 basis points in January, February, March, and then peak and be flat until the end of the year. So that reflects not necessarily a change in Fed policy, and I have to say it doesn't necessarily reflect what the Fed will really ultimately do over the next 5 months or 4 months. It may well be that the Fed raises interest rates 25 basis points in March, maybe 25 basis points in May, but not in June. It may be that the Fed raises interest rates 25 basis points in March, and then it plateaus from March into the end of the year or even next year. It's hard to say what the Fed will do, and the Fed clearly isn't taking its cues from what the financial markets expect or would like to see. Fed pays attention to that, but the Fed pays most attention and it derives its policy based on employment and inflation statistics primarily, and overall real economic factors secondarily, and doesn't necessarily do off of financial market activity, price levels, directions, or expectations in deciding what it should do with interest rates. And that's good, because that's not what its job is to do. And it has never done that. And, I've talked in the past about the wonderful work that the Fed did in 1987 when the stock market crashed in October of 1987. And the Fed said, hey, that's a stock market event. It's not an economic event. And we're not changing our interest rate policy because the stock market has fallen sharply. So interest rate expectations in the financial markets are rising. That's contributing to a stronger dollar. It all is based on a stronger view of the economy and a number of statistics that have come out that show relatively strong demand for a number of goods and services. There is a strong employment report, there is an employment report that's due out Friday, and CPM Group's expectation is that it could show another healthy report for overall employment in the United States. That could factor into precious metals prices. Now, precious metals prices have fallen. Gold was around $18.10 this morning. Our expectation is that prices are probably going to fall lower. A strong employment figure on Friday could drop the price down to $18.05 or even $1800. We've been talking for some time about the idea that you have a seasonal strength in the first quarter, which we saw in January. kind of dissipated early and over the course of February. And then you could see the prices sort of tread water in what's really the top half of last year's range of prices. So if last year the price ranged from a high of $2,040 or whatever and a low of $1,624, we might see, and we sort of expect over the first 3 quarters of this year, that the gold price might trade between, say, 1730 or 1740 or 1750, and a high of maybe, we've seen it over $1,900. We're not necessarily expecting that price again, but over the next 6 months, 7 months, but we wouldn't be surprised to see 1880. Fourth quarter, we could see higher prices because we were expecting a deteriorating political and economic situation, both in the United States and on a global basis. And in that kind of environment, you might see investors coming back to the market more. Silver, similar situation. But let me just wrap up on gold. Our expectation is that the strength that we expected in the first quarter is behind the market now, and the market will be trending sideways to lower over the next few months. We wouldn't be surprised to see a drop to 1800 or 1805 yet this week, and then lower prices in the near future. Silver got down to about $20.50 this morning. It's back up a little bit from that. Very similar expectation for silver. We would not be surprised to see the price decline. We're looking at a test of that 1750 or 2050, maybe 2045, maybe even lower, especially if you see a strong employment report on Friday. And we do think that the price is vulnerable to some extent on the downside. As with gold, you see a lot of investors sort of backing away from it. And it is kind of funny, like one of the guys who last year repeatedly said that silver would be $750 in 2022 is now saying that he is very sure that silver could reach $30 in 2023. So there's some dissipation of that wild bullishness predicated on false precepts about the silver market. But that's not relevant to us, and it's not relevant to real investors. CPM Group has issued trade recommendations to its clients this morning on our short-term view for gold and silver, our view over the next 2 weeks, our view over the next 3 months. Those trade recommendations, which explain this, what I've just talked about in perhaps a little bit more lucid detail in writing, went out to our clients today. You're welcome to become one of our clients. Now, we do have the silver webinar tomorrow, March 1st, 10 a.m. Eastern Time. It's a free webinar, or online seminar as I prefer to call them, and you can register for it at cpmgroup.com. We will record it and we'll release the video of it on Thursday. Because of our travel plans and the fact that we will be at the Prospectors and Developers Association of Canada next week, we won't do a video on this Friday. We may do a video next Tuesday from the PDAC in Toronto, or we may not, in which case we would do it next Friday when we will all be back in New York. That's all I have for today. Enjoy yourself. Have a productive week. Take care of yourself. Take care of people around you, and try to do something good for the world.